What's up, you guys? So in this video, I want to talk about my top 4 stocks right now under $10. There's a lot of volatility in the marketplace right now, but I know a lot of people are looking for quick ways to make a couple quick bucks and get in and out of the stock market with some good plays, because there are a lot of companies that took a huge hit, but a lot of companies that took a huge hit still have strong business fundamentals and are still poised to do well even in this environment we're in this economic situation. So this video, I want to talk about them, the 4 main stocks to buy under $10. Okay, so before we get into these stocks, I got to ask you a couple things to do real quick. First of all, annihilate that like button, just pound it really hard. It helps with the YouTube algorithm. I would appreciate it greatly. And second, subscribe if you have not done so already. Also hit the notification bell so you will get notifications every time that I post a new video, which is pretty often these days. As well as follow me on Instagram. I post there pretty much daily, so you will get other aspects of my life as well. So let's get right into it. The 4 stocks under $10. My first pick of the day is NAT stock. It's Nordic American Tankers. Now, this stock has been very volatile recently. Now, this is a oil vessel storage stock, basically. So there are these vessels that host storage containers of oil, and it's a very volatile stock to begin with. Now, I did a quick video on this previously. This stock is poised to do incredible things right now. The only thing is that it's been in relation to the oil prices. So now there's the reason it's been so volatile lately, especially, is because I bought into the stock, for instance, at $6.30. Now this stock went up to, I think it hit its peak at $9, where I was very close to selling out at that point, and most people would have just said, take it and run. It was selling right around not too long ago, around $3.5, $4 a share. Now, the reason this took a big run up is because the CEO of the company actually went on Kramer and talked about how they are making hand over fist money right now. He has never seen this kind of money that they're making right now. They are paying, they're getting contracts of where they normally would get $20,000 a day. They're making $100,000 a day in some of these cases just to store the oil, because there's literally no place to store the oil anymore. Oil is in there's such a supply and there's no demand right now because of this Roni situation, that they're just looking to they're running out of places to store it. So these tankers are basically able to charge anything they want. Now, the good thing to point out also on this is that right now it's right around $5. So it had a major pullback. Now, there are reasons for these pullbacks when they happen like this, so suddenly. So it went up from 9, and it's pretty much been on a straight decline from 5 to 5. Now, I think a lot of it has to do with panic selling. A lot of people are still selling contracts. Like, even though the economy seems to be reopening and there's talks about it reopening, there's still a oversupply of these oils. They don't want to just close off these oil, where they get the oil from, these oil, places, because it costs money, and then it costs money to open them back up. So they're just getting this oil and they have nowhere to store it. Now, there's 2 reasons that I believe that this stock fell so drastically recently. Stocks are all about supply and demand. The thing that drives a stock up is when there's a lot of buying power, when there's buying pressure on the stock, and there's just too many people trying to get in, the price keeps rising. When it's the reverse and there's too many people selling and there's selling pressure, the stock just keeps dropping, because that's the stock and what's happening. And that's what I believe is one of the reasons it's happening right now, is that there's too much selling pressure on it. People are selling, they're doing their stop losses, they're just selling out of the stock, and it just drops. Now, the second reason is that it's working in bit of a inverse to oil prices. So it's almost like the mentality. Now, it shouldn't be like this, because even though the country's not reopening, I mean, it would have to reopen like that, and there'd have to be so much demand on oil for this to be a reason for this stock to not go up. But these companies are signing 6 months contracts. So at least for the next 6 months to a year, these oil tanker companies are going to be making hand over fist money. So, and I agree, it's not a long-term play for me. It's an in and out play, but I do believe that for the next little short term, this is going to be they're going to be making money, a lot of money at these companies. And it's almost like they're working as an inverse with the oil, where the oil prices go up because it looks like oil's going to be used and there's going to be more of a demand in oil, and that the demand in the storing goes down. So it's working kind of simultaneously like that right now with how oil is working, but it really shouldn't be the case like that. I mean, there's still going to be a lot of storage needed for oil, especially now. The country's not opening back up that quickly. Now, also, this stock is a dividend stock, so just by holding it, you're getting paid. And it's not like it's one of those dividends where I believe is going to get cut, because they are actually making money now. It's not like a Macy's, say, that, the stock is not, the company's not making any money. They can't afford to pay out a 9% dividend, which was crazy. So they stopped the dividends. Here, NAT is making money, so they're going to continue to pay out those dividends. Now, will I buy any more? I bought in at 630 and it's down now to 5. It's a short-term play, so I probably won't. I'll probably let it go up. But I will say, if it does dip down to like 475, 480, I might, just to get my initial buying point down a little bit, my buying price, I may get it down. I might try to get that dollar cost average down a little bit, so that I will see more of an increase in gains when it does go up. But I do believe that it may go into the fours. Right now it's trading at about $5.04 a share, so we'll see. But I may tiptoe in a little bit more if it hits about 475 or 4.75 a share. So the second company that I've been looking at, I was actually in this company before at about 10, and I sold out at about 12 just to take some profits and to free up some cash. RVLV, Revolve company. It's a clothing company, but they play heavily in the social media aspect. So they have influencers. I mean, yes, retail has definitely been hurt right now, but it's mostly the retail stores. These places, this company is an online company. I bought into them at 10 even before this Roni situation started, and it went up to 12. I got out. I bought 500 shares, so I made some money on that, and I just wanted to get out with a profit. It did drop to about 8, but now it's trading up at about 10. I bought in again today at 10 flat. 500 shares, and just want to see what happens to it. I really think it's a chance to go up to 13, 14, 15 even. This company actually was trading at an all-time high about 45 back in July, so it hasn't been a public company for that long. It's only the company is only worth $735 million with a $715 million market cap. So it definitely has room to grow compared to a lot of its competitors. And with just the business model now, with doing everything online, with having influencers, it's in everybody's face, unlike somebody like Macy's, who doesn't have such an online presence, and it's more revolved around going to the store. So I do believe that Revolve company is going to just continue to grow and get out there, and it's not like people aren't going to buy any clothes anymore, especially coming out of this situation. You're going to want to look pretty, get some new fresh gear, and get out there and when we can get around some people again. So I think Revolve is going to be, and Amazon's been crushing it right now. So this is another online company that delivers. So it's just growing with their business. The business is not hurting right now, other than people not being able to make the money to buy the clothes. But, with the government funding and the stimulus opening coming in and the unemployment, the clothes are a necessity in some respect. So I do believe that this company is going to keep growing. Now, the last two companies, I got to admit, I got in and out of one of them real quick, but it is something to keep an eye on. The first one being Smile Direct Club, SDC. So this ticker symbol SDC, I got in around 7. It went up to 8, and I got out because it was a quick play. It had a huge run up. It's right now, I believe, trading around $7.39 a share. It went up 20% today. And I knew it was going to have a pullback. It's now up for the day around 9% as of filming this on May 6th. So, you know, the reason it went up, it did partner with a lot of the major insurance companies. So there could be potential for future growth with this. I just think it's a short-term play for me. You know, I may get back in around 7 if it reaches that. If it does get a pullback, you know, it was around 16 in March of last year. So it definitely, I mean, right in March, like right before this whole Roni situation happened, it was around 16 trading and it just dropped right down. So like I said, I think if it gets down to around 7, it's definitely something to look at, especially since it just partnered with all these top insurance companies. Definitely something to take a look at, and it's a lot of what people can be doing at home now. You know, the Smile Direct Club, being able to get those, you know, sent to your house. So it's something with the business model to be able to check out for the future. Now, the fourth company, very speculative, but there's reason to believe that this company and this share price is going to go up. NIO. It's Tesla's rival, basically. It's, you know, it's $3.61 a share right now. I bought about 1,500 shares around $3.50. So it did go up a little bit. You know, $3.54 to be exact is when I bought in 1,500 shares. It went up. I could get out now with a couple $100, but I'm gonna let it go. I believe my price target on this is 4. If it gets up around 4, I may sell half. If it gets up around 450, that's when I sell out right now, you know, until I have reason to believe otherwise. It's a $3.7 billion market cap compared to Tesla's, which is like a $145 billion market cap. This company has a lot of room to grow. Their sales, which they just announced, their sales in April, they had very high delivery numbers, more than expected. So that's a good sign. You know, this company's up about 9% on the day. I do think that there might be a little pullback on this. And if there is, I don't know if I necessarily will buy in. I feel like this, you know, it's going to go up before it goes back down a lot. But again, if it goes up to 4, may sell out about half. If it goes to 4.5, may sell out even more, all of it. And yeah, I would definitely take a look at these 4. Again, take a look at these 4, but I am not a financial advisor. They're just companies to look into. Do your own due diligence. Talk to a financial advisor if you'd like. See what they say. And my whole mentality, always with investing, especially your own private investing and personal investing is, take care of your essentials first, pay your bills, get out as much debt as you can, and then anything extra over the essentials that you can afford to lose, if you lost it, and you wouldn't be super pissed about it, that's what you should invest in and try to make some money on it. And, you know, especially if you're out of work right now and you know, and you have that affordability and that time on your hands, check these companies out, take a look at them. I definitely think they are good companies they're going to be around for a while. They have room to grow. Their business models are good. So take a look at these. And yes, that's my disclaimer. So don't just do it because I told you so. Again, I've been getting in and getting out of them. So again, if you like this content, please feel free to leave a comment below. Let me know what you think. I just kind of did this video on a fly, so it's not super researched. It's kind of just what I've been dealing with the past couple days with a couple different stocks that I think are, you know, under that $10 mark that you're able to get in and out of real quick, make a little quick profit off of. And you know, they're poised to make some money right now and grow, and they're poised to make some profits. So I don't see them going down at all even in this economy. So feel free to hit the like button. I would really appreciate it very much if you like this content, and I'll be making more of these videos. Let me know what else you would like to see, and if I think it's a great idea, I'll make a video on it. Subscribe if you have not done so already. I talk a lot about stocks, finance, stimulus checks, lifestyle, whatever, and hit that notification bell so you get notifications every time I post a new video, as well as follow me on Instagram. I post there pretty much daily, so you will get other aspects of my life as well. Other than that, take care, have a great day, and stay safe.